Hi there, you're watching Your Trades on ET now with me, Shreyanshi Singh and Ankita Saxena, and this is the show where we help you make sense of the day gone by in trade. So let's begin with just that. In fact, let's take a look at the Nifty. Now, of course, nothing much to complain about, at least initially, is how we started the day, Ankita. But when you take a look at what else has happened, you do have the Nifty ending sub those 24,300 levels. That's the key level that we were able to breach yesterday. Can't say the same about today at all, because you do have realty, FMCG as well as consumption exactly in that order. These are your top laggards coming in. As far as the sectoral basis is concerned, on the flip side, you can also take a look at pharma, commodities or even metals that remain quite resilient, but not much of a gain coming in for all three of these sectors. That's the kind of picture that you saw emerging. Now, in terms of the series, of course, Nifty advanced for the second straight series, and that's the kind of roundup that you saw coming in for the Nifty. When you take a look at the series gone by, you do have Nifty mid-cap that hit a 3-month high this series, surpassing that 100 DMA as well, and even small cap that hit a 2-month high this series as well. So that's largely what the series looked like. Other than that, the Nifty Bank, of course, also hit a record high this series. That's a key highlight coming in. Other than that, you did have Nifty FMCG, Nifty Realty, Pharma, as well as Auto also hitting 2-month highs this series. So some strength that we saw coming in for the series. On the flip side, you do have Nifty IT. That is the one that hit a 10-month low in the series gone by. And of course, you did have Wipro as well as Coforge leading some of those losses. But in terms of what happened and in terms of the counters that were buzzing away, it was largely a steady fourth quarter coming in for FMCG majors, HUL as well as Nestle. Let's take a look at those counters as well. Of course, HUL was down and out in trade, taking it on the chin. Nestle was the one that recovered slightly, and that is something that we saw coming in. There you have it, 0.3% downtick coming in. As far as Nestle is concerned, around the time when the earnings were reported, the stock was down anywhere between 1 to 1.5%. You do have Persistent Systems as well. It was quite a strong quarter four coming in for Persistent Systems. And you can say the same about Thyrocare and Canfin Homes. So largely, that's the kind of roundup that you have. Lots of earning counters to take a look at, Ankita.
Absolutely, Shreyanshi, like you mentioned, like a lot of earning candidates coming in now. Now let's look at the counters that did not do well on the back of weak set of quarter four earnings. We had weak quarter four for LTI Mindtree, Rallis India, that was in focus on the back of weak quarter four numbers. We also had Syngene that was down and out, almost 13% in trade today on the back of weak quarter four results. Actually, the results, it was more of the commentary that really bogged down the stock. So Syngene was trading with those cuts, but the revenue managed to cross the 1 lakh crore mark today for Syngene. We also have eyes out on Reliance, Maruti and SBI Life. SBI Life has actually come out with its quarter four results, and we will get you a detailed view of that. But the Reliance and Maruti is what we're expecting right now, the results to come out anytime soon. But let's get on board our techie Kunal Bothra is joining us now to weigh in on the markets. Hi Kunal, thank you for joining us. Kunal, we have, we are facing a resistance at the 24,300 level. We have had two positive expiries. We had an expiry for the May expiry. What are you penciling in?
So I think my sense is now that over the last 2 months, we've had a fabulous last 2 months where the Nifty has gained almost 10% and more from sub 22,000 mark and closing above the 24,000 mark after two successful expiries. I would expect that the markets would probably go in with a bit of a flattish or a muted expectations, because there's lots happening across the globe as well as across the geography. So I think in that sense, I would probably expect the markets to consolidate. But net that consolidation could consider to be a positive sign. The levels which you're looking out for is 23,800 to 24,000 as a major support point, as well as a retracement point for the index for the Nifty, and 54,800 for the Bank Nifty. I think if we manage to see these kind of levels back again for the indices, that would be an opportunity to create fresh longs.
Well, absolutely, Kunal. Since you mentioned flattish, I wanted to talk about the IT sector. IT pack was quite resilient despite a muted set of earnings from a whole host of companies as well. But with that in mind, do you think there's a breather that we should be penciling in as far as the IT pack is concerned?
Well, yeah, I believe so. In fact, over the last 2 weeks, I've been actually being a bit more contra for the IT stocks, especially the larger cap names, because my sense is that most of the indicators for the IT stocks were into deep oversold territory, and it's bound to be that these stocks will probably eventually see a bounce back and a much more stronger bounce back. We've already seen traces of that. HCL Tech has moved up higher. Infosys, TCS, these stocks have also gained somewhere around 5% to 8% in the previous last 1 to 2 weeks. I believe that there could be more room for the IT stocks going forward. I think it's about these stocks not going into a sharp correction post results, even though the anticipation has been a lot more negative for these stocks, and the fact that these stocks are making a comeback, hitting their fresh short-term swing high patterns. That I believe is a sign of confidence, which could probably come back into the news flow also for the IT stocks.
All right, and that's the take coming in as far as IT then is concerned. Thanks, Kunal, for joining us and helping us understand all of that. But, before we let you go, can you also tell us what picks you have for the viewers? Which are the stocks that you're looking at?
So I'll go with a few larger cap names. The first one is Ultratech Cement. That's a chart which is looking attractive, and especially with the fact that the stock is nearing a breakout. So 12,500 for Ultratech Cement as a short-term target. Stop loss could be kept at 12,000 mark. And the second would be Ban Paytm. That's a chart which I believe is coming back above the 900 levels. Excellent up move for Paytm over the very short term. So would look out for targets in the range of 940. Stop loss at 885.
All right, Kunal, thank you so much for your picks. We will let you go on that note, but thank you for joining us today. But moving on to an earnings candidate that's just reported its number, and that's SBI Life. Let's quickly take a look at what the earnings look like. First up, the net premium income has come in at 23,861 crore rupees, which is a downtick of 5% on a year-on-year basis. The net commission is at 998 crores. That's up 17.2% on a year-on-year basis. And as far as the profit is concerned, profit is seeing a marginal uptick of 0.3%, coming in at 814 crores versus 811 crores on a year-on-year basis. We also have the 61-month persistency ratio, which has come in at 1.5% versus 57.81% on a year-on-year basis, and the 13-month persistency ratio, which has come in at 86.64% versus 85.76%. This is also on a year-on-year basis. So that's what the report card looked like. Now, since the result has come out post-market hours, it is a wait and watch to how the stock reacts in tomorrow's trading session. So SBI Life, I beg your pardon, will be on our radar to a stock to watch out for on how the stock reacts to its earnings tomorrow.
Well, absolutely, and when you take a look at the persistency ratios as well for the for 61 months for the fourth quarter, like you marked, Ankita, that is also something that is very key to note, as you can see on your screens as well. But tell you what, time now for some interesting market opinion coming in from Bernstein's Venugopal Gare. What are the themes and stocks that constitute Bernstein's idea of a well-balanced portfolio in the current environment? Take a look.
Beginning of the year, the way our sector weights worked were that we felt that domestic stories should have a higher weight, which essentially meant that I ended up having my highest overweights in the financial sector. I have overweight on telecom, and I ended up upgrading utilities to an overweight. So these were the three defining overweights for us. We had moved to an underweight in healthcare. Remember, that was a globally exposed sector. Now, after 3 months of underperformance, we are equal weightage healthcare. We had a marginal overweight on IT services beginning of the year. We actually cut down the weights quite a bit through the year, and we are now more equal weightage, but not underweight IT. We are still playing it with particular stocks. And this is the contours of sectors, right? But from a stock standpoint, if you look at India portfolio, hasn't really tweaked much in the last 4 months, but has recovery candidates, which we had sort of included in that portfolio. Something like Bharti was added to the portfolio, and Adani was added to the portfolio. So we had some consumption names like Avenue Supermarts, and we booked profits in Zomato, but got into Jubilant. So it was a very wide range of bottom-up selection on.
All right, moving on to an earnings candidate then. Nestle has also come out with its Q4 numbers, which was in line with what we were penciling in. My colleague Snehi is here with all the number crunching. Over to you, Snehi.
Well, yes, largely inline set of numbers coming in from Nestle. Remember, we were already expecting a muted set of numbers, and that has been in line with our expectations. Revenue, EBITDA and PAT have been in line. However, on the margin front, it's been positive. We've seen a beat coming in over here. On a standalone year-on-year basis, revenue has come in at 5,504 crores, an uptick of 4.5%. Net profit has fallen 5.2%, so that is in line with our expectations. EBITDA is also up almost 3% on a year-on-year basis. Where we've seen a big beat is EBITDA margin, that's come in at 25.2%. Our expectation was 24.1%, so on the margin front. From the press release, we understand that domestic sales has closed 5,235 crore mark, which is the highest ever in quarterly moves. This has been supported by volume growth. This is all the commentary we have on the volume front. Beverages and confectionery has seen double-digit growth. Beverages has also been the biggest growth driver. Confectionery is up high single digits, and Kit Kat has been the leader over here. Maggi is back to positive volume growth, and Pet Care has also posted strong double-digit growth. In terms of the commodity outlook of the management, they've said that commodity prices continue to be firm for coffee. Cocoa prices have corrected, but they still continue to be high, and prices continue to remain stable for edible oils. Milk prices have cyclically firmed up on the onset of summer. So that's your outlook on commodity as well, and that's a lowdown on Nestle's Q4 numbers. You have revenue, EBITDA, PAT in line, beat coming in on the margin front.
All right, thanks Nehi for getting us that update. Well, that stock was down about 0.3%. But speaking of stock that was down, let's also talk about HUL, because that also reported an inline set of numbers. That stock was down and out in trade, down to the tune of about 4% coming in for that one, on the back of cautious management commentary perhaps, and even the margin outlook that failed to also woo investors. That is something that we were looking at in terms of the stock move being reflected as well. Let's also go across to Snehi, who's standing by to take us through the numbers. Snehi, over to you.
There's an inline set of numbers coming in from HUL for Q4. Let's take a look at what the earnings fine print is. Revenue has come in at 15,214 crores, in line with our estimates, uptick of 2.4% year on year. Net profit has gone up by 3.6%. EBITDA is also up almost 1%, largely in line with what we were expecting. EBITDA margin has come in as expected, slightly under pressure at 22.8% compared to 23.1%, down 34 bips on a year on year basis, but nonetheless in line with what we were expecting. Q4 underlying volume growth, which is their UVG, was up 2%, and underlying sales growth was up 3%. If you take a look at the segmental performance for home care, while the revenue has gone up by 1.8%, we were expecting this number to be of 3% the growth, so that's a miss on our expectations. There's also been a mid-single digit volume growth. For personal care, the revenue change is up 3% revenue growth. This is a beat compared to our estimates. There's been a low single digit volume decline, however, in this segment. Beauty and well-being up 4.2% in terms of revenue, and low single digit growth is what we've seen in volumes. And lastly, for food has been a big miss compared to our expectation. There's been a degrowth of 0.4%. We were expecting a growth of 0.1%, so mid-single digit decline in volumes is also being seen. So foods is something that has kept the stock in pressure. In terms of management commentary, they've said that the Pureit demerger will be completed by FY26. They expect growth to gradually improve. Important to note that they have reduced their margin guidance slightly. Earlier in the previous quarter, they had said that this will be on the lower end of 23 to 24%, and in their earnings for Q4, they said that the margin guidance is now between 22 and 23%. And they've also said that they will continue to focus on driving volume-led competitive growth, and if commodity prices remain where they are, they will see some volume growth going ahead. So that's low down on HUL's numbers, in line set coming in for Q4.
All right, moving on from the earnings candidate to a candidate that's set to report its Q4 earnings tomorrow, and that's Big Boy Reliance. That is all set to report its Q4 earnings, with the street expecting a muted quarter, but Jio could outperform. What can we expect? To get you all the details, let's go across to my colleague Varun, who's standing by with what the street is factoring in.
Well, we are expecting a soft quarter for Reliance Industries, where the revenues are going to increase by 0.5%, but the profit will decrease actually by 0.4%, and we are expecting it to come at around 18,471 crores. Also, on the EBITDA front, we are expecting a 1% decline, and the EBITDA margins would decline by around 25 basis points from 18.25% to now around 18%. Now, why the weakness? The weakness will come from the oil to chemical business, from the oil and gas business, but it would be offset by the digital and retail business. If you look, the benchmark Singapore GR, that is down by around 58% on a YOY basis, and this is basically because of weak global product cracks. So the oil to chemical business, if you look, the EBITDA is expected to decline from 12 to 14% on a YOY basis and remain flat on a quarter-on-quarter basis because of weak product cracks and petchem spreads. Also, the deep water gas prices have increased by 2% on a YOY basis, but if you look, the production from the KG D6 block, that has reduced on a quarter-on-quarter basis, and this will impact the overall EBITDA for Reliance Industries. For Jio, the results are going to be good. The EBITDA is likely to grow by around 16% YOY and 2% on a quarter-on-quarter basis. This is basically due to the increase in ARPU, which we are expecting a 1% increase on a quarter-on-quarter basis, and the ARPUs are expected to come at around 205 rupees. Now, if you remember, a few quarters back, Reliance has taken price hike, and that's the reason there is an increase in ARPU and increase in overall EBITDA of Jio. Retail business, On a year-on-year basis, we are expecting an increase of around 10%, but on a quarter-on-quarter basis, if you look, there would be a decline. This is because of high base, because in the last quarter, there were festival season, and that has impacted the overall business of the retail, and that's the reason on a quarter-on-quarter basis, there will be a decline, but on a year-on-year basis, you will see an increase of around 10%. So in a nutshell, if you see, Reliance Industries is expected to post a soft quarter. The oil and gas business, the oil to chemical business will be weak, but Geo and retail are expected to perform better.
Alright, then let's keep it going with earnings. Thanks Varun for getting us that update. But moving on, then major Maruti Suzuki is also expected to report its results. Then let's go across to Srishti, who's standing by with an update on this one. Looks like the margins are going to be dented. Srishti, tell us a little more about this.
So when it comes to Maruti Suzuki numbers, let me first take you through the volume growth that the company has witnessed in the quarter gone by. So the company did register a volume of 7.5% on a sequential basis, and a jump of 4% is what they have witnessed in terms of the mix. That was led by the SUV's contribution, and there were actually higher discounts back in the month of March. So on the back of that, the volume is expected to see a bit of a jump. Along with that, the company did announce the price hikes as well, so that has also come into effect, expected to boost the margins a little bit. But let me take you through the numbers expectation then. Firstly, onto the revenue figure, we are expecting a number of 40,948 crores, and that will be a jump of 7% on a YY basis. EBITDA expected at 4,911, and the margin number is expected to see a bit of a decline on a YY basis, and 12% is what we are factoring in. Let's also tell you the factors that could actually impact the margin figure of the company. So like I told you that the discounts were a little higher, but overall the other expenses is also expected to increase a bit on the back of the Auto Expo expenses as well as the e-Vitara launch that the company has done. Along with that, in terms of the profit figure, we are expecting a number 3,801 crores, and that will be a decline actually on a YY basis, but just of 2%. Overall, the depreciation as well is expected to inch higher in the quarter gone by on the back of commissioning of its Kharkhoda facility. So that's the expectation from Maruti Suzuki. But of course, on the commentary front, we will be watching out for the demand outlook, because given the fact for FY26, the passenger vehicle industry is expected to grow in low single digits. So let's see what the leader is expecting and penciling in on that particular front, and along with that, some of the new launches that are planned up, and also what the company is targeting in terms of the e-Vitara launch, and especially in terms of the pricing. That is something that we will be watching out for. Back to you.
All right, waiting and watching out for Maruti Suzuki that's set to post its Q4 results. But what were the stocks that were buzzing in trade today? For that, let's go across to my colleague Rabinder, who's standing by with all the stocks and news.
Well, yes, ACC is in focus, where company has reported its Q4 earning, and the company registered at rupees 5,948 crore. And if we talk about PAT, then the company reported a PAT at rupees 735 crore as compared to 748 crore year-on-year basis, and margins saw a slight decline from 14% to 12.4%. ACC declares highest ever annual PAT at rupees 2,402 crore, which is up by 3% year-on-year basis, and company registered its annual highest ever annual volume up, which is up by 14% year-on-year basis. Moving to next, Lupin were also in focus, where Lupin has received US FDA for generic tolvaptan tablet, and the tablet is indicated to slow kidney function decline in adults at risk of rapidly progressing autosomal dominant polycystic kidney disease, and the tablet has an estimated annual sale of USD 1,467 million in the US. Moving to next, on back of acquisition, Devyani International were also in focus, where Devyani International is set to will acquire up to 80.72% stake in Biryani by Kilo. The cost of acquisition is 420 crore, and the Skygate operates over 100 outlet across country, across 40 cities. Moving to next, on back of brokerage, Siemens were also in focus, where Jefferies has come out with a note on Siemens, where they have maintained the buy rating with target price of rupees 3,300. Jefferies expects Siemens Energy India Limited to deliver a strong earning growth around 40% EPS CAGR between FY24 to 27 because of the solid T&D demand pipeline and better operating efficiency. Even after a demerger, the remaining Siemens business still has a good upside potential. And lastly, DB are also in focus, where City High maintained the buy rating on Divis and high target price to rupees 7,050 from 6,850, where Divis, they say that the Divis has a strong potential to become a key supplier due to its capacity expansion, and City expect Divis to earn over $800 million in GLP-1 related revenue by 2030, and Divis remain a top pharma pick for City.
All right, thanks Rabinder for that list of stocks that we were watching out for and that were buzzing away in trade. In fact, there was another counter, Syngene, that was down over 12%. Ankita, quite the decline coming in for that particular counter on the back of a weak set of numbers. As we wrap up on this edition of Pure Trades, let's go across and listen in to what the management then had to say about the growth outlook for the company.
Pipeline build that's broad-based across all three of the major platforms of our business. So we're carrying forward a lot of momentum in the large molecule manufacturing, and we expect that, which grew over 20% in fiscal 25, to flow through into 26. In discovery services, we see a strong pipeline build. One area where we're seeing that is the flow of pilot studies coming out of rebalancing of supply chains in our customer base, China plus one. And we've seen in fiscal 25, a high level of conversion of those pilots into full-grown programs, and we expect to see that momentum continue into 26.